So before I start, just a quick poll question. Who of you think that it is a good idea to invest in mid-market hotels across the Middle East? Hands up.
Of
Good.
course.
You're on the right panel. What about in the audience? Quick poll. Who thinks that investing in mid-market hotels in the Middle East is a good idea? 50%? 50%. So I guess that means it's really up to you guys to convince them otherwise, or to explain what they're missing. So very good. So with that, I guess, Chris, question for you. That slide I had up there on terms of premium discount of a mid-market hotels to the rest of the market. Is that something that resonates to you? You've started up a new venture with MISC. How have you positioned that from a rate perspective in the market?
Yeah, it was important for us when we launched MISC to carefully positioning it away from what typically you would expect from in the region from an upscale hotel, an upper upscale hotel. Shaza Hotel sits on the 5-star segment, and we really wanted to create a brand that sits really at what we call upper mid-scale, upscale minus type of positioning. And we've been receiving so much demand from investors in the region who, for various reasons, I think we're going to discuss those reasons here. They wanted to create such type of product, but making sure that there is a clear correlation between the investment that they're putting in their product and the rate that the hotel can generate in this particular location. What type of area program you can do for this hotel, what type of facilities are needed. Yeah. So we took a lot of time to studying the dynamics between rate and return on investment to be able to position this brand clearly apart from what some people can confuse with a 4+ upper upscale, etc., but really coming into what people here think it's a new type of positioning for hotels. But I was having a discussion earlier where we said, look, if you really look at Debare, for instance, in Dubai, mid-scale hotels have been here for a long time.
Yeah. So actually, a couple of things. If there is a chair there, if I could get it, that would be helpful. And second thing, if we could get the slides back up, because there's just been some other introductions in terms of structure that I forgot to give before we went into this. So what I wanted to say is there's a lot of us on the panel today. There's a lot we want to get through, and there's a lot of things which we've already talked a lot about before. And so in my discussions with the panel before, we agreed there sort of be 3 specific topics, thank you, which we'd just take off the table because we all know about them. They're basically mid-market hotels are underpenetrated. We get that. There's also huge growth potential because of growing intra-regional channel and the need for having more affordable stock out there. And the final one that we always hear, which is land costs are too high. So let's move on from that. And let's focus on what really matters, which is if the returns are there, people will build the hotels, right? And if you think about returns, there's really 4 areas that matter. Can you get the right revenue? Are you going to operate it efficiently? Have you got the right location? And then finally, can you get the development cost to work? And those are the 4 topics I'm looking to cover. So we've talked a bit about revenue. I think one of the things we really sort of need to just validate is what we mean by mid-market. Rami, do you just want to comment on that? I mean, what do you think mid-market hotels in the Middle East are?
Well, for us, we see different layers in the mid-market segment, given that, our core business is in the mid-market space. We define mid-market, and there's budget, there's economy, there's mid-market. There's the question, what is mid-market? The way we look at things is we've defined it across 3 brands that we have. Budget, no frills, so extremely limited service, which you could call in the 2-star space, yeah, which is our premier class brand. You've got our Campanile brand, which is a 3-star standardized product. So it's a product that has limited services in the sense of limited facilities. It's standardized in the sense that we design it and develop it to a very strict guideline. We actually design it in-house. That's another differentiator. That's an economy lifestyle product for us. So we're creating a fresh outlook in that space. And then we've got a full service. So full-service mid-scale, which is, for us, in our case, the Tulip Inn brand, which kind of sits, depending on the market, we tend to have more F&B, we tend to have more meeting space, we even have ballrooms in some of them. And each one has a different positioning in terms of development cost, different rate structuring, and of course, each one depends on market specific segmentation as well. So for us, it's a wide stretch. The interesting thing with the slide
I'm going to stop you there, because we're going to try and get everybody a chance to speak. And something just to clarify for the organizers, given the clock here showing 20 minutes, and it was supposed to be a 55-minute session, is that accurate or not? If somebody can just tell me, because I don't think it is. So on that, thank you, Rami. So,
no worries.
So you've got what you think is a clear differentiator between mid-scale and upscale.
I just think there's a big flex in mid-scale.
Alain, do you think there is? Do you think guests get it?
Yeah, I mean, there is a lot of space in the mid-scale. Right now, the market is much more driven by, and the actual development of the hotel is driven by the local regulations. So what we're seeing is a huge disconnect between what the brands will actually ask for and what it is and what are the requirements of the local tourism authorities. So Dubai and Saudi have been ahead of the game in terms of regulation. But you still have places like Oman, where we started building an Ibis and we ended up with a Mercure, so it's a hotel that has 2 restaurants, that has a pool, that has rooms that are almost 30 square meters, because the authorities kept sticking to the fact that their standards have to be this way. Yeah. So this usually overrides whatever the brands come up with. So that's one of the major hurdles today when we develop hotels, before actually selecting the brand.
So what you're saying is you can have the different brands, but ultimately sometime in the markets, your regulations restrict to what scale you build, effectively.
Exactly. It's one of our major obstacles at the very early stage of the project today.
Very good. Samir, I mean, you operate mostly in Saudi. Yeah? How have you found, because you're relatively new in terms of investing in the hospitality sector, how have you found the approach towards investing in the mid-market? What made you look at the mid-market? And are you thinking local or international brands? 2 minutes.
It's challenging, but the mid-market is an attractive segment for us, which is giving the economy of the Saudi Arabia and giving the supply coming in the market. So we believe that investing in mid-market hotels can give you a good return on your investments if you have the right land location and if you have the right operator. So there's a big role to be played by the operator itself in order to help you achieve the return that you are looking for.
Okay, and how do you find that right operator?
It's tough. You have a lot of operators, but definitely the risk is always on the developer side to choose the right operators. You need to make sure that the operator is in harmony with you. He knows what you want, and at the end of the day, he can achieve the return on investment that you want, because given the risk that you are taking, the operator should bear some of the risk with you, because at the end of the day, he's the one who's managing the hotel for you. So from a developer point of view, you can focus on the land, the location, the development cost, but the operator himself, it's for the operator to achieve the revenue and the operation efficiency that you are looking for.
So on that, let's move across to operational efficiency. And Jaidev, you've come out with, I think a very unique product in the market with Rove. Tell us a bit about how you drive operational efficiency with Rove and why you're going from an investor to an operator, asset light.
Yeah, sure. Rove is essentially a JV between Emaar and Miras. We have 3 existing hotels, and we're opening our 4th hotel in the next few months, followed by another 6 in Dubai. Part of the reason for us entering Rove, before I come to the op efficiency question, was we recognized that there is a major segment of the market which is bored of cookie-cutter, 3-star, mid-scale operators. And we recognize that there is very much a millennial mindset, people who want value, people who have money, not necessarily mid-income, but people who have the money to spend, people who want to stay at a product like Rove, and they'll eat at Tiptara and they'll shop at Dubai Mall. Right? But there is that customer so we recognize clearly there's major white space, and so we recognize that that's an opportunity. In terms of operating efficiency, I think you can look at it in two ways. I mean, essentially, now not just Rove, I'm saying mid-market in general is very volume-centric. Essentially rooms, so department profitability is high, 80, 85%. Yeah. GOP margins tend to be 45 to 55%. We've done higher than that in the 3 existing hotels that we've got to date in the last 9 months, at a relatively $100 ADR. EBITDA margins are 35 to 45%. In terms of operating efficiency, we all cluster hotels here, so shared services adds 6 to 8 points to GOP directly. So those are some of the things that we look at.
Okay, so you're saying it's about finding that right mix between balancing product and design over space and service. Yep. And that's what it's about for the Middle East.
I mean, there's certain elements that you may want to retain. So, for example, our back of houses are minimal, right? Public spaces that are important to us and important to the Rove brand are the lobby, the double height lobby, the arrival experience, the daily, which is the all-day dining concept. So there are certain aspects that we'll keep, but back of house is minimal. Our GM doesn't have an office; she sits in the lobby. They deal with the guests, very customer facing. So a lot of back of house is stripped out. Back of support functions as well. So,
yeah. Okay. Thank you. Elie, we've not had a chance to speak to you yet. So tell us in terms of how Rezidor is thinking about this when it looks at the mid-market. Is it, you pure play hotels? What do you think about apartments, mid-market resorts, things like that?
We're quite active in the mid-market segment under our Park & by Radisson brand, especially in the Middle East. At the moment, in our operating portfolio, we've got less than 20% of our hotels as Park & by Radisson hotels in the 3 to 4 star segment. But if you look at our pipeline, we're closer to 50%, so you can see the shift. And within that, almost half of it has a service apartments component, because at the moment, there's a demand for mid-scale hotels and service apartments in the entire region, whether in the mid-scale segment or the upscale segment, but much bigger demand in the mid-scale segment. We've got a couple of Park & by Radisson resorts under development as well, and Park & by Radisson service apartments, whether standalone or in conjunction with a hotel. And something I'd like to add to what Jaidev was saying about operating efficiency, it starts with the development of the product, which is support what you're saying, because you don't need that back of house. You may not need that second outlet, and if you do want a 4-star rating and I hate to talk about star ratings, but sometimes you're forced to get a 4-star rating to get a second outlet, for instance. You just lease it out. You reduce your staff to room ratio, you reduce your operating cost, and this is where you drive higher margins. And at the moment, what we're doing is Park & by Radisson is a full-service mid-scale hotel, but as we speak, we are opening around 20 hotels in the region, half of them being Park & by Radisson. This is an opportunity for us to implement the European efficiency model into the Middle East to reduce the staff-to-room ratio. Okay. That's something we're working on.
Alain, you've worked across Europe and in the Middle East for quite some time with a lot of operators. Yep. Do they do a good enough job in driving operational efficiency?
I mean, we work very closely with them. So we're owners, developers, and asset managers. So we'll come in. I mean, efficiency starts from day one, the day you start planning and doing your concept design. So we'll work with their technical teams and our architects to make sure we build in, something that's adapted to the market and that's not especially cookie cutter. And then we work alongside the GMs very closely, and we're very active in asset management. And we benchmark basically everything from manning all the items in the P&L, etc., across our 12 hotels. It so happens that we've got 3 hotels in Australia. So, just building on your point, Elie.
Very important Middle Eastern market.
Yeah. So with 3 hotels in Australia, and we speak back to operators and we say, why would you have 8 persons in accounts, whereas you've got 2 in Australia? So, Australia and the Middle East are very different, but maybe you can deal with 3 or 4. And we build constructively together, and I think key is actively asset managing and being very present alongside of them.
Yeah, but it's not the role of the operator to do this. I think you are doing a lot of work on behalf of the operators.
Well, if you sleep on your pillow, then it might happen, it might not. So, that's why we are very active in every part of the business, and we literally control everything. So
I totally agree with you, but I think there's a major role that the operator should play also by helping the developers in order to achieve the efficiency that you want. And sometimes you see the operators, sometimes they are very enthusiastic at the beginning when signing for the development, but later on when you go to the operating stage, this is where the challenge will be. How you keep pushing them in order for them to achieve the efficiencies that you need.
The way we look at them,
Yeah.
we look at them like great partners, and we go building with them. So they always act on your behalf, right? So what we do, we take an active role, we deal with it, and we use their expertise, and we use what really matters is the network and the marketing muscle they bring.
So it's like a wife that you
Actually-
fight with quite a bit, but you try and quarrel and make up afterwards.
Exactly. It's
Sorry, Elie?
Yeah, can I just add something? I think what's important is to anticipate rising costs. And at the moment, the days when we used to achieve 60% profitability margins in Saudi Arabia are no more. And the costs are running high and they're increasing across the region, whether it's Saudization, Omanization, or energy costs or taxes. And I think this is an opportunity to anticipate those rising costs in advance and start to cut on your staffing and on your payroll. And this is where we can be more efficient. So it's and we've got at the moment, like I said, 20 hotels opening this year. So it's not only about signings; we're actually implementing them with our openings.
Yeah. Sorry, Chris, go ahead.
If I may, we're also seeing owners that are taking a complete different approach than yours, because basically they're trying to move away from the pride of owning a luxury hotel or a five-star hotel. So in their mind, I want to do a mid-scale, upper mid-scale, but they keep pushing the operator on adding a restaurant. I want this on top. I need the ballroom. Why do you need the ballroom in this market? You don't have to. So we're actually playing the opposite role of trying to contain the owner of saying, mid-scale is good. Don't force it into something that it's not, because then your returns don't make sense.
That's essential, because I think the mindset in the region is shifting. You know, today we're sitting here, and in so many forums we talk about mid-scale. I can tell you that 5 years ago, this was not the case.
Yeah.
You know, we've been developing mid-scale properties in this region for over 20 years. That we have 62 hotels in the region, and that's our core. It was not easy, because usually the majority, and let's face it, the majority of mid-scale products in the region were makeshift buildings that were commercial, residential, or half-built or not built, and we'd come in and we'd try to make it work in whether city center or secondary locations. The key point to have operating efficiencies is, as you rightly say, is to come in early and work on the development early. And that's why we even do interior design ourselves now.
But still, Rami, the development cost is still high relatively to the mid-scale in the region.
Not for us. I mean, if we're brought in early, I can confirm to you that the flex of the costs that we look at, we're looking at an average cost per key of $85,000 to $95,000 a key, and that we have experience in that will be achieved. Okay, and the high end of that is roughly 110,000 when it's a full service 3-star, and that affects your operating efficiencies because payroll. If you have wasted spaces, you need more people technically, as well as energy costs. If you can trim those down, especially with we talked about VAT, we talked about how expenses are going up in terms of operating expenses. If you can control those, you know, the profitability margins will still be very attractive. And the ego is no longer, well, the ego in terms of return on ego is shifting drastically. We're getting, you know, thankfully, quality developers today who want, they may have a 5-star luxury asset, but they want to do 5 mid-scale products as well. So that's where, you know, the market is, and it's great to see for the long-term sustainability, I think.
So I mean, just going back to what you're saying then, don't start by trying to build a St. Regis and then convert it into a Campanile.
Well,
That's
no,
probably not going to work.
The problem is, you know, we see a lot of buildings being built with 40 square meters, or there were offices, and we're trying to convert it, and then we convert it into a non-standardized product, but the efficiencies are down. It's just naturally down. Bring us in early. We like to be involved early and to give the developer the maximum value up front.
So Sama, we've heard about the importance of bringing brands in early.
Yeah.
But what about when you do bring them in? How have you found it in terms of flexibility to the project versus brand standards? And
Look, the flexibility depends on the flexibility of the brand itself. So sometimes the brand, it has to cope with your development, because sometimes you have a small piece of land, you have a limited built-up area. You need to try to fit the brand to your development and to have an efficient design at the end of the day. And this is where the operator also should be flexible in terms of some brands. So you go for full service, limited service. Always the challenge is with the back of the house. How much you can limit the back of the house in order to decrease the space that you are using in your development, and then at the end of the day, keep the operational aspects of the hotel itself. It differs from one brand to another, so every brand has its own characteristics. But I believe it's very important for any operator to have this flexibility that can help the developer move around some of the constraints he has in his building.
Okay. So just changing tack slightly, and then I think we'll look to take some questions from the audience. So, if you look across a lot of the markets in the world where mid-scale or select service hotel product has grown fantastically and been incredibly successful, it's really been around two things. Number one, it's about consistency of product, and secondly, it's about scale. It's about having a brand and a product which consumers know. And I think one of the biggest challenges the region has is who's going to provide that scale in terms of brand for mid-market hotels? Because it is still relatively small scale, as we've seen. I mean, how do you overcome that?
Look, I think it's also the world is a smaller place, right? And the beauty of the Middle East is travel is coming from west and east. So what we're trying to do is we don't have the scale in some of our brands here. And a lot of us as well from the operator side, but we have the distribution and the visibility across. So whether it's China or India, where we're one of the largest players now, or in Europe, they know our brands. They'll be flying in. But I think critically as well for also the smaller operators. Today, there was a big challenge earlier about who is better. I don't think there's better or worse. I think it depends on the blend. If you give a quality mid-scale product, even if the brand, there isn't that strong brand awareness yet, people will trade down, as you were saying. People are willing to experience something new and stay at a less expensive place and spend more outside in the destination.
Alain,
in our case, the decision of the operator selection is mainly driven by financials and returns. And the regional network is very important to us. Out of our 12 hotels, 9 hotels are Ibis. And what we're seeing, and they've really pioneered, the 3-star hotels with us in the region. We open markets with them in Kuwait, in Jordan, in Oman, etc. And what you're seeing is that this type of market really attracts intra-regional travel. And you need the network. The people that travel in the region need to find the same hotel and consistency wherever they travel. You're addressing the same people all the time. So the fact that Ibis today has hotels in Riyadh, Kuwait, Bahrain, Muscat, etc., is a key decision factor for us.
Okay. So I'm just going to turn to the audience and see if there's any burning questions out there. Anybody? Yep. Is there a microphone somewhere? It's coming.
Hi, good afternoon. Abdullah Soni, Mad International. Question for the brands. If we look at a traditional market like the US, where most of the brands originated from, we'll find that over 95% of the hotels are franchised. Whereas when we look at here in the Middle East, it's totally the opposite. It's probably less than 5% that is franchised. I'd like to know where you guys stand in terms of franchising some of your brands. Thank you.
Shall we start with just a one-word answer, and then anybody who has a specific comment?
We do both.
Franchised?
And manage. But we're being more careful in how we structure with our owners.
Yeah. Jaidev?
Still, at this point, management contract, still too small, no global distribution just yet.
Yeah, Rami?
We're not franchising at the moment, but it's something that I know we're going to be looking into very soon, with selective owners.
And Chris?
we don't franchise. When you have a brand that has a very specific identity, that has a strong cultural DNA, you want to protect that. So we find that management agreements for us works best.
Yeah.
But I think the question will be, why not franchising? Is it because of the market itself, of the lack of really good management companies that can?
It's a good question.
Yeah.
Because I think the market is becoming more sophisticated, and there's a lot of owners that are becoming more sophisticated. 10 years ago was a challenge, and there is brand damage sometimes, and so we're always trying to protect the brand, right? I think two things: if you're able to structure it with the owner and giving them support, even if it's a franchise, what we're trying to do is support on recruitment and training and system development now. So the word manchise is thrown around a lot. So we try to do that a lot now. And with a few of our brands, there's a few brands that are extremely specific for us. We design it in-house completely. We're trying to launch it and then potentially in the future, flip it into a franchise setup, because it's about the operating efficiencies at the end of the day.
I mean, for us, it's management clearly for now, until we've built enough scale, at which point we might look at franchise, but it's not really in the agenda today. So,
yeah. I mean, I think just looking across to Europe and the US and translating it to here, so one of the things that has been missing from Europe until literally about 10 years ago was professional independent management companies.
Yeah.
And in the last 10 years, they've grown significantly there. I think they're still to come to the Middle East. I think there's some players, but certainly nobody of scale yet. And as that comes, it obviously makes an alternative choice for owners and gives that as an option.
I think owners should understand as well that some companies are built as franchise models. They have franchise models, and for them, it is the way to go. They have the structure for it and the support for it. Well, many of the established management companies, the reason they haven't gone into that because they are not a franchise model. They eventually may adapt to the market, and the market may be ready in a few years. But it's unfair to sort of compare operators doing franchises and operators not doing franchises, because they're two different structures.
The third model that is now growing for some reason, and I can't understand why, is that you have management, you have franchise, and now you have a trend where people want to create their own brand and manage their own hotel unbranded. There's like as if the hotel management companies and the brands are becoming big monsters and don't pay them fees, you won't get any return, just I want to manage my own hotel. And we're seeing new brands popping up on a regular basis that are not really brands, but just someone who wants to manage their own hotel. I think this is also a challenge that we're facing when we're talking to owners.
For me, it's not a challenge. I think the space there's enough for everyone, personally. And I just think it depends on the owner and the developer. We believe that scale matters, especially in mid-scale and the distribution and what we talk about, visibility. We think it's essential. The OTAs have created that capacity for people to run hotels independently. We believe we'll be able to create more margins and more returns from the scale and visibility. So for me, it's I think the industry is big enough.
Yeah, but the risk, I think, for the developers now is when you see a lot of operators, they are getting bigger. So how much attention you can get if you are a small developer, how much attention you can get from the brand, and how they will treat you. So this is the support that you need during the operational, when you have, 30 brands or 25 brands, and if you have enough operational team to support all these hotels on a regional level. So this is the question that makes people, I think, go to their own brands in order to be nearer to the customer experience.
There is a middle solution, to that, we believe, and that's what we try to do. So Louvre set up local knowledge. So there's presidents of regions that have been in the regions for a very long time, and they are extremely hands-on with our partners. And we find that balance works well.
Sorry, Chris, do you want to just jump in there?
No, we're actually securing many deals because we are a small company, and we're giving attention to each baby as if it was our own. And some owners like to go with the big brands and have 5,000 hotels. Others actually want that attention, the holding hand, and they prefer to go with the smaller groups.
Yeah, I agree with that. I mean, from our end as well, we've got 3 existing hotels. We've got a number that we're developing on our own. but there's a huge amount of interest from an HMA management contract perspective in the region at this point. And to Chris's point, I mean, there are massive advantages of being small. So we're not in a race to get there. We're focused on quality and not quantity. And it gives us an opportunity to tweak our own product, right? I mean, we're not hitting the market today with a Rove product that will be the same 3 years from now, necessarily. So we're making adjustments as we go, both on the physical product, on technology, implementation, and we're able to roll out things a lot faster to market.
So it's about finding the right partner for the project. So time for one last question for the audience, from the audience. Any burning questions out there? No? Good. So let's just do a quick poll then. So now that you've heard from these guys, who thinks that investing in mid-market hotels is a good thing in the region compared to Finland?
It's about 75% now.
Yeah.
Well, I think the key question is why.
Yeah.
You know, we didn't talk about why today, from a market dynamics a little bit, but it's why it's because of the need to create mature destinations. You need affordable lodging, affordable transportation, you know, affordable services, and I think that's the key thing. And especially from our
and
that's a great point there.
Sorry, go on. And to Rami's point, I think not only is the the demand and demographic there, it's fast to build. It's a 18 to 22 month process for a Rove, for example. They are, efficient to operate and high profitability margins, and inexpensive to build. A 250-key Rove costs 90 million dirhams, right?
quicker ROIs.
No.
Quicker ROIs.
Yeah, better ROIs, lower development cost, and the market is shifting towards these developments because they will provide the investor with better ROIs or better IRRs. So this is where the trend is.
So last comment, Chris.
Yeah, you just have to take also the role of government into consideration when they're diversifying their tourism strategy. Saudi Arabia is a great example where they started imposing tax on land that is not utilized. So suddenly owners, as landowners, start saying, oh, I have to develop my land. And obviously not everything is suitable for upper upscale and luxury. So we're seeing those owners rushing into starting to build without even having the operator or doing even a feasibility study. But this is fueling also that demand from an investment standpoint into this market.
Very good. So I think in conclusion, I just want to say thank you to my panel. I think you've been fantastic. I think from my perspective, in terms of what we've seen in the numbers, what we've shown in there is that there clearly is huge potential for mid-market hotels. The development and the revenue cost metrics do stack up from a return in perspective, and I think, Rami, as you importantly pointed out there's a lot of drive for it coming from a government investment perspective as they look to diversify and create more affordable destinations, and that's across the region. So with that, I want to say thank you to all of you, and thank you very much, everyone.
Thank you.
Thank you.